Let's dive a little bit deeper into the action right now with all of our reporters. Abigail, tell me what you're watching, please.
Romaine, I'm watching the S&P 500 in relation to that ISM miss. Let's start out with the S&P 500. Here's that range chart we've looked at many times. The S&P 500 unable to get meaningfully above last year's all-time highs. And then, of course, we have a set of all-time highs this year, stalling there once again. The RSI, as we've pointed out before, putting in a bearish set of lower highs, telling you bullish momentum is simply rolling over, the bears stepping in. This is the S&P 500 goes below that 50-day moving average today, suggesting that we could see the S&P 500 drop back down into this range. In fact, Greg Calderon of Bloomberg News just told us about an options trade that suggests some traders are targeting 2,700. One reason to think that could happen, take a look at this chart of the S&P 500 in white and the ISM manufacturing data in blue over the last 5 years. And we see that they've roughly tracked each other over the last couple of years. The S&P 500 rising, the manufacturing sector expanding above 50. But more recently, here we, of course, have 2 months of contraction for that manufacturing sector. Huge divergence, Taylor, between stocks and the manufacturing sector. You have to believe it's going to reconnect. Even if ISM comes back up, it could still be a bit painful for stock investors, Taylor.
Well, Abigail, I'm taking a look at the stocks index because it was better performing than the broader major averages today, only off about 0.8% relative to some of the other major averages that we follow. And this is after analysts over at KeyBank upgraded Analog Devices, Microchip, and NXPI Semiconductors. They're saying that demand trends for these chip makers with exposure to Asia are starting to improve. Overall demand trends are weak, but they're not getting worse, and that inventories are beginning to normalize and expectations for fourth quarter are right where they should be. And then I wanted to take a look at sort of what this means for the stocks index, which on a technical level has come up against a key resistance level. If you take a look at a chart that I'm showing here in my Bloomberg terminal, as you can see, the stocks has been hitting up above that 1600 level in a triple top pattern 3 times. Now, typically that would be sort of a bearish signal, except that the pink line is the 50-day moving average, which is still holding up against very, very well. So we'll have to see again if that 1600 level has been an overhead resistance line. Could it become the next support line? We will have to see. Renita.
Thanks, Taylor. I'm taking a look at gold, which is a commodity, of course, getting a boost from this ISM manufacturing data since it is a safe haven. It's up about 0.5%, rising for the first time in 3 sessions and rebounding today after that U.S. factory gauge sunk and after the U.S. dollar, in which gold is priced, took a turn lower. ISM manufacturing, as we know, posted its weakest in a decade, missing all estimates. This bolstered the case for the Federal Reserve to keep lowering borrow costs. However, the precious metal is actually down for the month and has sunken below its 50-day moving average for the first time in 4 months. Yet, signs of slowing global growth and on-again, off-again trade tension makes gold shine as a safe haven, and analysts see a boost persisting.